begin with the $5.1 trillion countdown. Alphabet, Facebook, Amazon, Microsoft, Apple, all reporting results next week. The stakes couldn't be higher. Only Amazon and Microsoft are up on the year. So, Guy, we kick it off with you. Which of these tech titans will you be most focused on?
Hello, Mel. And when Carter Worth is back, you know Fast Money is almost back 100%. It's great that CBW is back. For me, it's Amazon next Thursday. This is something we've been talking about for a while. While you were away, one of the things we talked about collectively was how well Amazon was trading in the wake of what was a pretty dicey broader market. Now, obviously, you've seen Amazon's rallied 50% from the lows we made seemingly just a month ago. I think the way to trade it, and I've been saying this for a while, and we'll see if it bores out, but I think you own it into earnings on Thursday. You pull the ripcord ahead, and you look to re-enter the position at 2170, which, if you recall, was the high we topped out in February. So that's how I'm looking at it. I don't know if it's going to be a benchmark for the broader market, but that's how I think you trade Amazon next week.
I mean, Amazon is a nice sort of microcosm, Tim, if you will, of the trends going on right now in this pandemic. I mean, we've got the work from home trend with AWS. We've got sort of the lower mix when it comes to Amazon grocery deliveries and the potential boom in e-commerce.
Yeah, look, Amazon is clearly a have in terms of what's happening, both kind of going into COVID and what's coming out of it. They're arguably the best operator. They've been not only taking market share, but they've been building infrastructure through all this. We know that they've added incremental workers after also furloughing some, but their net going stronger into this. I think of all the names to look at, I think Google's the most interesting just because of potential sensitivity to the ad market, potential sensitivity to search, especially around things like travel and leisure, which is 12 to 15% of their search revenue. And that's the place that I think we really have to understand from the front line what's going on. And I think Google is probably the most defensive in terms of valuation when I look at the diversity of their business as well. So 34% of the NASDAQ reports next week in those 3 or 4 names right there with Facebook, Amazon, and Microsoft. And it's going to be a big week.
I mean, Jeff, that means to me that, this week when it comes to the leadership in the markets is really going to be key. We're really resting sort of our hopes on this group of stocks at this point.
Well, we are, and I think Carter's going to talk about it a little bit more later, but I think a lot of good news is being priced in. I mean, if you think about sort of the rosiest outlook, it certainly is that large cap growth area. If you look at the flows into the triple Q ETF, for example, really aggressive. And given the concentration of those names in the overall index, if there is a disappointment in the near term, then I think that could affect the overall market. But I think you have to think about whether you want to be a trader or an investor. If you're a trader, I think in the near term, there could be some disappointment just because how these names are priced. I think about a name like Microsoft. This is a stock that I want to own. It has great management. It has $60 billion of cash on the balance sheet. But in the near term, they've already guided down in personal computers. So I think there's a lot of optimism given to the cloud business. And the question is that going to live up to the billing? In the very near term, I'm not so sure. If you think about some of the names like Salesforce and IBM, for example, they're talking about businesses dialing back their tech infrastructure spending. So if the economy continues to get worse, that number could stagnate a little bit in the cloud space over the next couple of quarters, and maybe the stock needs to give back a little bit in the near term. Again, long-term, great company. Near term, potentially too optimistic.
BK, you're a trader and an investor, but put your trader cap on, will you?
Yeah. So, listen, I think, guys, I'm with Guy on when you look at the way that Amazon is traded, you want to be selling Amazon into earnings. It's just gone a little too far, too fast. The other names, what I think is interesting about them, they have all been the growth stories, right? So when people are concerned that we're all going to stay at home and the growth isn't going to be there, they've all piled into these names. So you got to be concerned about that. But the one that I'm really, really watching is Apple, right? This has been the darling. They've now come out with a cheaper phone. And what I'm concerned about is that average selling prices are not going to be there in the future. And so I think given the environment that we're in, I think Apple, you absolutely want to be out of Apple before earnings.
Or if you are a believer that there are recessionary winds to come and people cut back on spending, Tim, Apple may be better positioned in the rest of the world outside the United States to be selling phones. Tim.
Sorry, I'm not sure if that direction was to me.
Yeah, sorry.
So look, I think you have a case with Apple. My bad. Nice delay here. Apple is to me, between their cash pile, their ability to actually have defensive attributes in the capital market side of their business. The fact is, the services business, we'll see just how sticky it is, but that should be smoothing out the earnings profile. Look, the data we got 2 weeks ago out of Apple in terms of the response in March in terms of the iPhone sales out of China is very encouraging, and I do think there is some pent-up demand. So I'm less worried about Apple because I think it's a little bit more defensive on valuation, even though relative to itself it's pricey. I would go to the places where we're most concerned about the consumer and advertising and the sensitivity on the economics, and I think it's really more in Google and Facebook.
Yeah. Guy Adami, let's indulge me, if you will. Let's say you lost your job, and hopefully you won't, but there are millions of Americans out there who have. Out of work right now, where do you cut back? When it comes to Apple, you might still stick with your phone. If you needed an upgrade, you might still go with that, but you might cut back on services. And services have been a growth part of the business. That has been the hope, right, for a lot of the Apple investors, like a Pete Najarian, for instance, who pounds the table on Apple and cites the services business as the growth piece. What happens to that piece in a recession?
Well, first of all, you control my fate, as you know, Mel. So, if you put the thumbs down,
only.
You won't be seeing me again, number one. Number two, I'm probably the wrong person to ask because I don't use their services. The only app I have is the clock app, and that seems to be free. But I'll indulge you for a minute and say, I think you're right. I think people will cut back on those things, and I'm not convinced. I don't know. I'll take the other side of what Tim said. I'm not certain there is this pent-up demand. I think people have learned to live with less, and I think that's going to manifest itself not only over the next couple months, potentially over the next couple years. So the upgrade cycle that everybody sort of hangs their hat on in Apple, I'm not sure it's going to be as vibrant and robust as a lot of the people hope. And I just point to Goldman Sachs' downgrade a week or so ago. I think it's really interesting that ahead of earnings, they slapped, I think, a $230 price target on the name. So I have that in the back of my head as well.
The phone app and the calculator app are also way up there, Guy. You got to check those out. Just to push back a little bit on the upgrade cycle, I mean, haven't we learned from this experience that 5G is more important than ever? I mean, BK, if you have a phone that's going to be woefully slow and you have to be remote, you finally realize, hey, I need that 5G.
Yes, but think about a world if we're remote, that means that we haven't gone back to work. That means the economy's worse. Are you really going to be buying an $1,100 phone? That's the concern, is the price point on these upgraded phones are going to be very expensive. So listen, whether you use just the phone app and the calculator, as Guy apparently does on his Guy phone, or you use all the other apps in the application store, I don't think services are going up, and I don't think that people are going to be buying $1,000 phones.
And Guy, by the way, the application store is open despite shutdowns because it's not a physical store.
I didn't realize that was one of those.
Yeah.
Is that? Oh.
It's on the line. It's on the line.
That's
all right.
virtual.